This session will be recorded, of course, so you can watch it back in your own time as well, as I do believe that just watching a session once is good, but when you watch it again and again, you will start to take in more information as you go. So, just before the markets open, you're going to have this session tonight, which is all about risk management. So we'll get started into the slides. So now, if you were here for our first session, that was an amazing introduction that we did. It was all about the introduction to gold trading. If you remember, we went through the WAP platform where you can access all the introduction videos. We even went through TradingView as well, and we also have the PDF document which has all them keywords, key explanations, very much a bootcamp sort of style document which you can go through and refer back to any time. So if you guys have not still got access to WAP, or you still haven't got access to the PDF, then please reach out or have a look in the Telegram. There should be a link in there for you. So without further ado, let's get into risk management. Now, for me, risk management is potentially one of the most important topics in all of trading, and we've introduced it straight away into our second session because we believe that this kind of topic is very, very important to go through early in your trading careers. So what is risk management exactly? It is basically the difference between winning in trading and blowing accounts. Now, if you've been trading for a while, you know, like myself or any other more experienced traders in there, blowing accounts essentially means that you lose all your money that you've traded. So it can happen mainly down to risk management. So the key here is that in this VIP chat is that we're trying to make sure that everyone on this call is not going to be blowing accounts, and hopefully everyone will be profiting with the amazing signals that we have, but not only that, be growing their accounts in the right way with the right proper risk management. So what is risk management exactly? Well, I'm going to give you a quick reality check first of all. So most traders actually don't lose money in trading because of the strategy that they have. They actually lose money because of risk management. So you could have the best strategy in the world, you could have like 60, 70, 80% win rate, but if you've got very bad risk management, you're going to be setting yourself up for failure. So that's something that we're going to look to avoid. Hopefully by the end of the session, you'll have a lot more information, a lot more understanding on how it is that we risk in the markets, but also make sure that we preserve capital, but at the same time look to grow our accounts as well. So like I said as well, we don't control the markets. You know, we can't say that, oh, can you just move the market up a little bit, hit my TP please, and then do whatever you want to do. It doesn't work like that in trading. You know, there's hundreds and thousands, millions of people in the markets trading, buyers versus sellers and so forth. But what you can do in the market is that you can control your risk. You can decide how much you want to put into the market and be comfortable with the risk that you're taking as well. So what is risk exactly? So risk is essentially how much money you are willing to lose per trade. Okay, so you might have heard key terms like lot size, pips, obviously you know your feelings as well. It's not anything like that. You know, risk is actually actual money that you are prepared to put on the line to and are willing to lose in a trade. Okay, that is your risk. As soon as you know what your risk is, then you know that if the worst case scenario was to happen, let's say you have a stop loss in there and your stop loss gets hit, then you know that this is the amount of money that I'm prepared to lose on this trade. So anyone going into the markets and understanding how much they're risking, you're already putting yourself ahead of other traders out there, because you're already understanding exactly that if I lose this trade, the worst that can happen is I'm going to lose this amount of money. Okay. So I hope that makes sense. And like I said, we will open up questions towards the end. So if you do have any questions throughout this presentation, save them to the end and we'll open up for a Q&A as well. Okay, the golden rule. So you might have heard so many percentages scattered around in the industry. But what we like to think of is that you don't want to be risking any more than 1 to 3% per trade. Okay, now you might have heard other percentages, 2 to 5% and so forth. We believe maybe 1 to 3% is probably a good point to start. So if you look at this table here, you've actually got a list of account sizes. So I'm going to try and use my mouse if I can just to navigate for you. So you've got your account balance here. You can use this in either pounds or dollars, depending on where you're based in the world. I'm going to just stick with pounds because I'm based in the UK. So if you've got like a £500 account, for example, and you want to risk 1% for a particular trade, that means that the maximum you should be losing is £5 in a trade. Okay. Now, if you want to risk 2%, it will be £10. 3% is £15. Okay. So let's say you're risking, you had a £500 account and you're going to enter a trade, a signal has been received. You will want to be risking a maximum of £15 on a £500 account. Okay. Now, as the balances go up, your risk can go up as well. So if I was to choose, let's say, £2,000 as your account balance, a 1% risk on that is £20, a 2% risk is £40, 3% is £60, and so forth. If you guys want to take a screenshot of that, you can. It's just as a little kind of guide or a little helpful tool to understand roughly how much you should be prepared to lose on any given trade. Okay, I'll let you take a screenshot of that and we'll move on to the next slide. Okay, so how does risk per trade affect your survival in the market? Now, this is something that I've never seen anyone teach this, right? And it should be, in my opinion, especially early on in your trading career, because, you know, I remember when I first started, like I blew accounts like right from the start because I didn't know what I was doing. I didn't know about risk management back then. And I'm sure all the experienced traders out here have all been through something very, very similar. So understand that if you had an account balance of £1,000, I'm going to give this as an example, and let's say that you were risking just 1% per trade, that is, you're expecting £10 is your risk on a trade. Now, to blow that account, you'd have to have 100 losses in a row. Okay, now tell me something, or even just give me a thumbs up for this one, but have you ever seen in our Telegram channel that we've lost 100 trades in a row? No, absolutely not. And we definitely won't be doing that as well. But for example, if you were to increase your risk, and let's say you had 10% per trade, now all of a sudden you're at risk of blowing your account with 10 losses in a row. Now, I know that our channel is absolutely firing at the moment, and I've never seen anyway in the time that I've been here, is I've never seen 10 trades in a row that we've lost. So I know that we've got a very good win rate. I know we've got some great trades and signals that get sent to us. But I want you to understand that that doesn't mean that you can start what we call over leveraging or over risking on your account, because it's very easy to chase the fast numbers. You got to believe that slow and steady is what wins the race here. Okay, if you try and flip accounts, that's good on you. If you've got the money to risk it, then great. But what we recommend is that you keep your risk to a minimum, and even 5%, I would probably even stretch as far as 5%. That means that you would require to have 20 losses in a row to blow your account. And I don't see that happening with us here. But for my benefit, I would probably say 1 to 3%. Stick the good habits in early, and then when the bigger accounts come along, you'll still stick to that same risk, but you'll see your risk amount will look to increase. Now, I've talked a lot about risk here. Now, you may have heard the term called risk to reward. Okay, now just give me a thumbs up if you've heard of risk to reward before. Just get a show of hands if I can see. Yeah, so some people have heard of risk to reward. Now, what this basically means that yes, we know how much we're risking in the market, but you want to know what your reward is as well. And a 1-to-1 risk to reward, that basically means that your stop loss is equal to your take profit, or your SL equals your TP. Okay, so if I had a 50 pip stop loss and a 50 pip take profit, that is a 1-to-1 risk to reward ratio. And this chart here is super, super powerful, because if you are taking trades on a 1-to-1 risk to reward, that means that you can be profitable when you are over 50% win rate. Now, our Telegram channel, I know that we are higher than 50% win rate already. So hopefully, if you're taking the trades, taking the signals correctly, you should be profitable in the market. If, for example, you wanted to trade at a 1-to-2 risk to reward, that means that your take profit is actually double your stop loss. So if I had a stop loss set for 50 pips, then my take profit would be 100 pips. That is a 1-to-2 risk to reward ratio. That means that you can actually have a win rate less than 50%. So even a 40% win rate will still make you profitable in the market. Now, there are some traders out there that might trade 1-to-3, 1-to-4, even 1-to-5 risk to reward ratio. Okay. Now, I'd probably recommend in trading at least a minimum 1-to-1, 1-to-2 risk to reward ratio to start with, because to get 1-to-3, 1-to-4, 1-to-5 setups, it's not always available in the market, should I say? You know, especially where the markets move. So I would recommend 1-to-1, 1-to-2 risk to reward ratio, definitely as a minimum. And just making a statement here as well that you can actually be wrong more than you are right and actually still make money in the market. And I've just proven that with that 1-to-2 risk to reward ratio. I hope that makes sense. So win rate is, when someone tells me, oh, Amrit, I've got a 90% win rate on my strategy, I'll be like, yeah, bullshit. Tell me what the risk to reward is on that, because most likely they're going to have 1,000 pip stop loss and like a 10 pip TP. So it's, yeah, you're going to win a lot of trades, but you're going to have one trader which will end up wiping your account. So, if someone says that, I always like to think of, okay, what's your average risk to reward on your trades as well? So I'm hoping that makes sense. I'm going to go into something a little bit more technical now, but don't you worry, because I've got some tools here to actually help you fast track what we call position size should be. So for those that are keen on the numbers or keen to understand actually what happens and how you create your, how we actually calculate your lot size, this here is the formula that will help you to calculate your lot size. Now, for those that are a bit more beginners, don't worry about this slide. It's not a problem. We've got tools that are available for you to help you calculate your lot size. This is just for those that are a little bit more advanced and want to know exactly what goes on. So your lot size is what you enter into MetaTrader when you place your trade. Now, if you're starting off with like a 500 or £1,000 account, you'd probably start with a 0.01 lot size. Okay, 0.01 lot size is 10 cents per pip. So if a market moves 50 pips, that will be $5 in profits. Okay, so when we are calculating lot size, you need two things. You need to know what your stop loss size is in pips. And the great thing is that when we look at our signals that come through in Telegram, you can see, or hopefully you can calculate what the distance is between your entry and the distance to the stop loss. So the distance between the entry and the stop loss, that's what gives you your stop loss size in pips. I will go through that on the TradingView chart so you can see it visually for yourself. And you also want to know what your risk is, and that's the actual money that you're prepared to risk. So this lot size formula, if you want to remember this, you can. It's your actual risk in monetary terms divided by your stop loss size in pips times 10. Simple as that. So a little bit of GCSE maths there for those that are keen on that. So I'm going to give you an example. So if you said you wanted to risk £100 on a trade and we have a stop loss of 60 pips, what you do is you put your numbers into that formula, £100 divided by 60 pips times 10 gives you 0.17 lot size. But just bear in mind that is lot size in US dollars. And then what we do is we do an exchange rate on that. So whatever the current exchange is of pound to dollar, that 0.17 will then convert to 0.22. Okay, so if you've got £100 risk on your particular trade you want to risk, and then you've got your stop loss size in pips, 60 pips, your lot size should be 0.22. Okay. So I'm hoping that makes sense, but what I'm going to do is I'm going to show you a couple of, well, actually I'm going to show you one of the lot size calculators here. So the first one, which does it for you automatically, is called Stinu. Now Stinu you might have already heard of, you might already have subscribed to. I think it's like $20 or so for the year. And it's a great tool to use on your mobile phone in order to get the lot sizes on here. Now, I do actually have a little cheat sheet on here on the next couple of slides or so. So get your phones ready for that, and I'll make sure you can take a screenshot of that as well, or you can watch it back on the recording. The second lot size calculator is the one that I use on my desktop, which is called MyFXBook. That's free, and it's like I said, it's better to see that on the desktop. So I'm going to go through that in a second with you as well. And I'm actually going to show you on TradingView as well, actually how to mark up your stop loss, your take profit, and actually find your risk to reward ratio in the charts itself. Because obviously what we're trying to do is we're not going to turn you into signal junkies. We're going to turn you into hopefully analyzing the markets a bit as well, maybe potentially placing your own trades as well. So with that being said, I'm going to jump onto our live demo now. So just bear with me when I get my screen up. So if you can just give me a thumbs up or some sort of emoji to let me know if you can see my FXBook screen on here. Lovely. So that is great. So what we're going to do is here, I might try and make it a little bit bigger if I can. Okay, cool. Let's try that. Lovely. So this actual link here, what I will do is I'll try and pop it into the chat if I can. Cool. So you've got that link in the chat, and what we'll do is that we'll make that link available for you guys after the call as well. So what we do on here, we've got myfxbook.com. It's a Forex calculator and it's the position size calculator. So what I've done on here is literally, I've clicked on the currency pair and I've chosen XAU USD because that's what we're going to be trading. Now the account currency, so if you are in US dollars, you can change that to dollars. I'm going to use GBP because that's the Great British Pound. That's what I'm going to use. And the account size, so I'm going to go with £1,000 account on here. And then what I'm going to do is I'm going to change that risk to 1%. Okay, so this is just, this number you put in here is a percentage between 1 and 100. So like I said, we're going to mainly stick to 1 and 3. Now stop loss size in pips is, I'm going to just say, let's say 60 pips for now. And the trade size for gold, the minimum trade size for gold is 0.01. So you just have to put the trade size in there so I can actually work out what the lot size should be. And then it's got the pound to dollar current exchange rate that is happening. So $1.34 to the pound. I'm going to click on calculate, and then what you'll see on here is you're going to see underneath here you've got sizing and it says 0.02. So what this basically means is that if you've got a trade, if you've got an account of £1,000 and you've got a stop loss of 60 pips, your lot size should be 0.02, and that's when you're risking 1%. Now if I change that to 2%, calculate, you can see now it's 0.04. If I change it to 3%, now it's 0.07. Now just bear in mind that lot sizes in gold, it's always rounded to the second decimal point, so 0.07. You won't see like 0.071 or any other further numbers after the second point, okay? So the second digit after the decimal point, that is where the maximum where it goes up to. So what it does is it actually rounds to the nearest 2 decimal places. That's what it does. So I'm sorry it's a little bit mathematical on a Sunday evening, but I do believe that if you can just get this right and understand what kind of lot size you are playing, it will get you so much further in the markets if you know what exactly you're risking. So let's try and play around with some more numbers. I'm just very quickly, I'm going to do 10,000 now, and I'm going to do 1% again. This time I'm going to change the stop loss to 80 pips. Okay, and let's see what our lot size now is. So our lot size now we should be playing is 0.17. If I change my stop loss to 70 pips, let's say it's a slightly smaller stop loss, the lot size increases. And again, 60 pips stop loss, lot size increases again. Okay, so the larger your stop loss, the smaller you have to reduce your lot size by in order to risk the same percentage of the account. So just give me a thumbs up if that makes sense. That's great, that's great. And obviously I'm trying to cater for all levels here as well, but I do believe even if you're advanced, it's always great just to recap over these things and just understand the risk to risk ratio, but also understanding your stop loss size and so forth. But like I said, you can play around with this, and if your account's in dollars, you can do the same thing with dollars, but you can see now the exchange rate disappeared, right? So now if I do a calculate, you see now, hopefully that would have worked. Let's try with 2%. There you go, and it's worked. Lovely. And you see how that's 0.17. If I change it to pounds, 0.22. So you see how the lot size changes because of the exchange rate. We're risking 1% of £10,000, whereas before I was risking 1% of actually $10,000. And obviously dollars is not the same as pounds. Just something just to be aware of when you are doing your lot sizes. So what I'm going to take you on to next is something on the charts that I'd like to show you if possible. So if you remember last time in our live demos, this was in session 1. If you didn't see session 1, please go back and have a look. What we did was we actually showed you what the chart looked like on TradingView. And what we did was we showed some basic candlesticks on here. We also showed where the start of the day begins, and then also where the session finishes. And then we added a handy tool which gives you a colored background on the screens, which understands, for example, when does London open, when does New York open in this sort of amber section, and then when does London finish, and then we just have the New York session open to the end of the day. So this black here, this trading area in the black, this is where Asia and Tokyo sessions is. So this is, for example, when I believe that, well, when we wake up in the UK, we are ready to trade when London opens, and then we've got that really vital period of London and New York crossover coming through on here. And what we're trying to do here is that when we, for example, remove all this stuff that we have on here, we just have what's called a naked chart. But what we're trying to do is we're trying to give you some structure in the market, so you can start to give yourself a bit of an edge to understand where we think that price may look to go. Okay, so if we go back to where we had our sessions, that just breaks up the day, so we can see what happened, for example, during overnight in the Asia and Tokyo session. We can see, I mean, I can see from my eyes straight away that there was a low here in this sort of black section. And we can see that when London opened, where did market go? It actually, what we say, took a sweep of that low before returning on itself and coming back to a previous high, daily high on there, and even reaching a previous day's daily high as well. So that already has given you a little bit of structure there, just a little bit of a nugget there to see how was price reacting to certain levels. Okay. So that's not what I wanted to go through on it. I digress, but I wanted to actually show you how you'd actually calculate your risk to reward on a chart if you were to place a trade. So this was from Friday's trading activity, and we can see there was a slight sort of downtrend in the market here, and then obviously a bit of a reversal. Now, let's just say, for example, I've just picked a random zone on here. Let's just say I've just got a horizontal line. I'm just going to stick a line just there for now. Actually, it's brought my nice drawings in actually in my zones. Okay, that's great. And I'm just going to imagine that for now, let's say we took a break of this particular previous structure here. We can see that market rejected a third time, and then eventually it broke out, retested, and then shot off. So that might have been actually one of the trades that was sent in the Telegram. I can't remember now. So let's just say that we've seen a breakout and a retest, and let's just say that we've entered at the candle close here. Okay, so I'm going to just zoom into this section here. Now, this particular drawing that I've just added, I'll show you where to find that. It's on your left hand side, and it is basically under this kind of symbol that looks like three lines with a little diagonal on there. And when you hover over it, it should say long position. So when I click on the right arrow to that, you can see that this shows long position, short position, and many other features on here. Now, what I've done is that on the long and short position, I've actually starred these as my favorites. Now, what that basically means is that at the bottom here, can you see this favorites bar? And these have got some of the main tools that, for example, I tend to use. So what you can do is you can actually add these to your favorites, and this will allow you now to draw a long position and a short position. So if I'm just going to delete that again, I'm going to show you how to add it. Arrow, long position, and I'm going to click on the area where I wanted to draw it. So from what I remember, it was a break, retest, and it was just here we were going to do that. Okay, I'm just going to remove that line for now so I don't distract you guys. Now what's happened here is that you're going to see a shaded area which is green and a shaded area that is red. So basically what this means is that market entry is at this point here. If I just hover my cursor over that, what that's given is a price of 4761.59. Okay, now this is on gold. It says on here gold versus US dollar M5 chart, which is the 5-minute chart. So each candle is 5 minutes in duration, and we've got the open, high, low, and the close there. Okay, so let's say that I'm gonna right click on this, and I'm gonna click on settings, and then what I'm gonna do is I'm gonna go on to the entry price. Now, just to keep things fairly simple, I'm going to choose an entry price of 4760. Okay, so my entry was 4760, and this is for a buy, so it's a long. Okay, so short is the sell, long is the buy, and what we're going to do is I'm going to put a take profit. So it says profit level here. So you can either do it in pips, or you can do it in actual price itself. So I'm going to just go with price itself, because when you see parameters in the Telegram channel, you normally see the price levels, right, for TP1, 2, 3, 4, and so forth. So I'm just going to imagine that TP, let's say our first TP was 4765. Okay, so I'm going to hit enter on that, and can you see here it says ticks? It says 500 ticks. Okay, so the reality is now between 4760 and 4765, that is 5 points on gold versus US dollar, because it's 5 points difference. That equates to 50 pips, which is equivalent to 500 ticks. So please don't get that confused. Yeah, we normally work in pips or points, but So it's 50 pips, but in TradingView, they go one decimal point further. They like to be a bit more complicated, a bit more detailed. So remember 500 ticks basically means 50 pips. So just take one decimal off that. Now stop loss, let's say the stop loss was, so 4760 was the entry. So let's say that the stop loss was 4755, okay? And I've put it in the wrong place, haven't I? See, that's why you gotta pay attention, Amrit. So 4755, and I'll hit enter on that. And can you see behind me that the diagram actually changed? So I'm going to just zoom in a little bit further into that now. I'm going to make this a little bit higher so you can see this properly. So this trade on here, hopefully you can see this. I can't make the numbers any bigger, unfortunately, but that it says stop at the bottom and it's got 5 points. And I know 5 points is what I was prepared to risk, and that is 500 ticks. Okay, and then what we got here is a risk to reward ratio of 1. It means that my stop loss is the same size as my TP. So this shaded area in red is the same as a shaded area in green. So this is a 1-to-1 risk to reward on this trade. This trade was placed at 4760 and TP was smashed within literally the next candle on this one. Okay, just give me a thumbs up if that makes sense. Hopefully it does. Great. So now if I was to go for a 1-to-2 risk to reward ratio on this, what you can do on here is I can actually drag this up myself, and you can see the number actually changing manually itself. So I'm going to drag it up here, 1-to-2. So you can do it like that, or you can actually right click, go to settings, and you can see now that my profit level there, it wasn't quite 100 pips, it was a 100.2 pips. So I'd want to probably move that to there. There you go. And that's what your TP is. So that's just nice to show you like what you're aiming to do in the market. Now, let's say, for example, that the stop loss was slightly larger. So let's say that the stop loss was 4750. Let's say we were trying to make the trade breathe a bit. And you can see here now that the risk to reward ratio again is a 1-to-1. So you've let your trade breathe a bit on here. Luckily with this trade, there was literally hardly any drawdown. So it literally hit TP1 within a few candles, and then it was done for. But if you, like I said, if you're wanting to go further, you can drag this along, and let's say you're wanting to go for a 1-to-2 or 1-to-3 even. So let's say I'll do a 1-to-3. This one, did it hit 1-to-3? Yes, it did. So you would have held a little bit longer on this trade. So you would have started in this trade at around 12:35 UK time. You would have waited for the New York Open, and then eventually it would have hit TP around about 3 o'clock in the afternoon UK time. I'm hoping that makes sense in terms of risk to reward, in terms of how to draw risk to reward on your charts. I do believe it's nice to see when you are planning to take any trades that you understand a little bit more about how this works as well. So if you feel like your stop loss size is, like, for example, in your analysis might be too small, then what can happen on there? You might find your stop loss maybe gets hit, and then all of a sudden then the price reverses and hits profit. And that's happened to the best of us. I've seen it happen many times where you get the direction right, it might just wick your stop loss and then go to TP. But the great thing is that we've got some great signals coming through, and like I said, you've already got your entry parameters, you've already got your stop loss in place as well. What you guys just need to get right is that risk element. So with that being said, I'm going to take you back onto the slides now. So we've gone through my FX book. Stenu is on your phone, so I probably won't do a demo of that right now, but hopefully you guys can use that. And we've also gone through how to actually mark up stop loss, TP, which is a take profit, and your risk to reward ratio. So position sizing. Now this is a little cheat sheet. So if you want to take a snapshot of this one, you can. So what this basically is that you've got your account balance on the left hand side here, 500, 1,000, 2,000 and so forth. If your account is between that number, let's say it's at 1,500, you can just go into the lot size calculator or go somewhere in between the two lot sizes of either side. So if you're risking 1%, I'll put it in big writing here, 1% risk on your account, on each account balance on here, you've got the actual amount that you're looking to risk and what your lot size should be. And this is the actual lot size, which is 1% of the account that is in British pounds. Okay, so not in dollars, this is in British pounds. So the lot size may vary if you are using US dollars as your account balance on there. So for that, go onto the MyFX book and you'll be able to do that. If you want a dollars template, I can do one for you and you'll be able to screenshot that as well. But this is for those that, and from what I've seen in the signals as well, you tend to see the stop loss sizes anywhere between 60, 70 and 80 pips. So I'd probably recommend maybe to like sort of print this out or something so you have an idea of what your lot sizes are. Now, what you will notice on here, if anyone's playing with slightly smaller accounts like 500 to £1,000, you'll notice that the lot sizes pretty much stay the same. Okay, so they hover between 0.01 and 0.02. But just understand is that as your account gets bigger, so let's say you're looking at 50,000 in your account, your stop loss is going, sorry, your lot size is going to change based on the stop loss size. So 60 pips allows you to trade a lot size of 1.12 for 1% risk. But if the if the stop loss is bigger, if I can get my words out, it's a lot of words there. If your stop loss size is bigger at 80 pips, then your lot size will look to reduce to allow you the same wiggle room to play with. So the larger your account balance, the more accurate I believe that these lot sizes become. Because of the smaller account balances, what you'll find is that your lot sizes will stay pretty much rounded to the same sort of figure. Even up to 2,000, you can see there's not a massive difference between 0.04 and 0.01. So just to reiterate that point, the bigger the stop loss, the smaller the lot size. The smaller the stop loss, the bigger the lot size. So you might have some trades come through or some signals come through where the stop loss might be 60 pips or it might be 80 pips, and you'll know then roughly then you can adjust your lot size accordingly. So this is the same chart, but now this time this is on 2% risk. So again, just take your screenshots of this if you need to. But like I said on the previous slide, the smaller accounts tend to have smaller lot sizes. It's the larger accounts is where you'll see that difference a lot more in terms of the lot size being played based off the stop loss that you have. So take a screenshot of that one, take a screenshot, take a screenshot, take a screenshot, and then boom, onto 3% risk. So this is for those that are a little bit more riskier in the market. So with a 3% risk, what I actually recommend what you can do is actually now at this point, when you've got a little bit more to play with on your lot size, this is where you can start to do multiple positions. But that doesn't mean that you open up a 0.03 and a 0.03 and a 0.03 on the same trade. No. If you're on a £500 account and you're risking 3%, stick to your 0.03. But if you want to, you can open up 3 trades at 0.01. Okay, so for example on here, let's say that you open one trade at 0.01 with a target to TP1. Second trade, 0.01, but your target's for TP2, and your third trade is 0.01, and that could be a target for TP4. So altogether, you're risking 0.03, so you're still risking £15 on a £500 account. However, you've got 3 trades in there, so you've got the advantage that, you know, once it starts moving into profits, you can maybe close a trade once it will close automatically when you place your TPs anyway. But you'll hit TP1, TP2, and then hopefully you get a rocket, as they say, and it'll smash into TP4, and you should be good to go. Take a screenshot of this one. Make sure you are not risking more than this. If you are, then you are at risk of over leveraging. That is on you, but I have made sure that in this call I have gone through and hopefully preserved as many accounts as possible on here. So just the last couple of slides to finish off today's session, and we'll open up a Q&A as well. I believe, like I said, this is such an important topic to cover, but I wanted to just expose what amateurs do. And look, I have been guilty of this, and I'm sure a lot of you may have been guilty of this as well, is that you pick random lot sizes. You take one trade and you're like, oh, I'm just going to place a 0.02 on this one. And then the next trade comes in, oh, I'm going to do a 0.08 because we won the last trade, so I'm going to go up higher. And you go back to 0.02 again, and then you go back to, you go even higher, you go 0.5 this time, and it's like, you're just picking random lot sizes, and that's not going to do anything for you. You might get a quick growth, you might get a lucky run, but in the long term, it's going to come and bite you. So make sure you are knowing what you're doing with your lot size. The other one is moving that stop loss. Oh my gosh. The amount of times I've seen people just say, I just want to give it a little bit more room to breathe. I just want to give that trade a little bit more wiggle room. I can see it's going to maybe touch this area here. Don't move. Once you've set your stop loss in place, stick to it. Do not start moving. The only time you should be moving the stop loss is when you are being told to, once your trade has moved into your favor and you're moving your stop loss into profit or break even. Okay. And the last one is obviously over leverage as well. So again, you might start risking 10, 20% of your account. and you lose that trade, you've lost 20% of your account. And do you know how long then it takes for that to get your account back to where you started? It takes you even longer. You need to, it's basically not a great place to be. So obviously what this all results in is, yeah, you're going to end up with blown accounts. You're going to end up trading with emotions because you want to revenge trade. Is something that you might have heard of, you know, and you won't just have any consistency in the markets. You know, the idea is that you want to try and remove emotions as much as possible out of trading. The way I think about it is that you should understand the risk that you are prepared to take before every single trade. And no matter what happens on that trade, whether you win or lose, you know, you lose, you don't want to start flipping tables. If you win, you don't want to start jumping on top of the tables. You want to make sure that you are staying level-headed throughout. Just keep consistent in your emotions, not only with your lot sizes in your trading, but also with your emotions as well. So just think of it like a robot. That's how I like to think of it. Just think of it like a robot that's placing a trade. You've hit your win. Okay, move on to the next one. You know, don't think about that previous trade. Let's go again. So what do the professionals do? Professionals, absolutely, they keep their risk fixed. They know what they're risking. They know their percentages. They know when to walk away from the markets when it's not working. The amount of times I've seen, for example, Kay sometimes tell you guys like, okay, I'm done for the day now. I'm not going to trade today. Or, you know, and he knows what he's doing in terms of his risk. He knows what he's prepared to risk in the market, and he doesn't want to go any further than that because he knows his emotions. He removes his emotions from the market. The lot sizes are calculated. You know, whether it's using that Steno app or what the screenshots I've just shown you, or my FX book, whichever it is, you know your lot sizes, you know what you're prepared to risk. And what this ends up in is that you're going to get consistent execution at the end of the day. You're going to stay consistent and you'll be able to hopefully grow your accounts the right way with the right percentage. See, I'd rather people not tell me how much they made in the market. I'd rather them tell me how much percentage they made. You know, I made like 3% this week or 5% this week I've made. You know, then you know that, oh, okay, so I've made 5%. That means that whatever balance that's on, you know that you can replicate that with a larger account in the future. So I'm hoping that, guys, makes sense. I'm just going to wrap up with a conclusion, and then I'm going to open up the Q&A very quickly as well. And then we'll be done for today as well. So what have you taken out of today? I've written down hopefully some statements that you can resonate with. So first of all, you've got access to a lot size calculator now, right? Whether that is through Steno or my FX book or the screenshots that you've seen. You can go into TradingView now and you can actually mark up stop loss and take profit and even risk to reward on there as well. You should know now for your account size how much you should be risking per trade based on the stop loss size that's been given and also the risk percentage as well. So I want everyone to probably say this in their heads. I will not over leverage on my account. If you are over leveraging, that means that you're risking a larger percentage that you're prepared to actually take. I will not move my stop loss to let my trades breathe. Please, please, please take that in, because the amount of times I've seen people do that, it is crazy. So just stick to the parameters. If you're taking the signal, stick to the parameters in the VIP. So the strategy can make you the money. It's the risk management that keeps it. You got to let that stick in as well, because there's loads of strategies out there, loads of strategies, but it's the risk management that's what's going to determine whether you are successful with that or not. There is one quote, you know, I might bring a few of these from here and there, but this one's really should resonate with everyone on this call tonight, which is basically, when you genuinely accept the risks, you will be at peace with any outcome. So imagine that sort of peace sign, you know, as if you like doing yoga or something. You should be at peace with any outcome. So if suddenly the trade goes against you or hit stop loss, it shouldn't matter to you. You just go on to the next one no matter what. And that's a quote from Mark Douglas from the book Trading in the Zone, I believe. So have a look for that book if you want to read up further on psychology. That being said, next session will be on types of markets as well, because obviously at the moment you've seen XAU USD, gold is what we tend to focus on, but there are other markets out there, other opportunities out there for you when you get to that point when you want to start analyzing the markets, looking at other areas. We'll go through that in a little bit more detail as well in the next session, and we'll be covering some key nuggets in that as well, hopefully covering beginners and advanced stuff in there. So I hope you guys found that useful as a session, and of course the next session will be put into the Telegram channel when it will be available and when it will be scheduled in for. And that session will not be one not to be missed, because that will be all about types of markets, and it's something very, very important because it suddenly opens up the door to not just gold trading, but also other areas that you might want to trade as well. But with that being said, I hope you have a great rest of the Sunday evening, and the markets do open up in a few hours. So let's hope for a great trading week for everyone, and enjoy the rest of your evening. Take care, guys. All the best. Catch you soon.